Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that's all about making serious money moves. And let me tell you, there's a lot more to it than meets the eye. Stick around, it's going to be interesting. Alright, let's get straight into it. What we have here is a Form 8K filed by Mobile Infrastructure Corporation. Now, these filings are typically for big significant events that happen with a company, and this one is no different. The main story here is about a big financial transaction that went down. So the date of this report is the 29th of October 2025. This is when a company called Mobile Infrastructure Funding LLC, which is an indirect part of Mobile Infrastructure Corporation, completed something called an asset-backed securitization. Basically, they took a bunch of their assets, bundled them up, and sold them off to investors to raise a substantial amount of cash. Specifically, they raised $100 million by selling what they call Series 2025-1 Class and -2 notes. Think of these notes like IOS but backed by specific assets. In this case, mortgages and deeds of trust on real estate, primarily parking facilities. The investors who bought these notes paid about 88.3% of the $100 million face value, which means they likely expect a pretty good return, and the company got a significant chunk of cash up front. These notes have a long way to go. They have an anticipated repayment date in October 2030, but they won't fully mature until October 2055. That is over 30 years. They can be paid back earlier, but there is a penalty, a make-whole premium, along with extra interest if they're not paid off by that 2030 date. Now, what's backing these notes? It's the company's real estate assets, specifically parking facilities. The company's subsidiary, Mobile Infrastructure ABS Holdco LLC, essentially guarantees these notes. This means if the parking facilities don't generate enough income to cover the note payments, the guarantor has promised to step in. It is a way to make the investment seem safer for the buyers of these notes. It is also important to note that these notes weren't sold to the general public. They were sold in a private placement to select initial purchasers. This means they haven't been registered with securities regulators, and they can only be traded under specific rules. On the same day, the 29th of October 2025, the company also entered into a management agreement. This pretty much outlines how the company's subsidiary Mobile Infra Operating Company LLC will manage these parking facilities. They'll handle maintenance, customer contracts, and other administrative tasks. For these services, the operating company will receive a monthly fee. This fee is set at 1% of the TTM adjusted net operating income of the asset entities, capped at $41,667 per month. So basically, as long as the parking facilities are doing well and bringing in enough income, the operating company gets a decent cut. So what did Mobile Infrastructure Corporation do with all that $100 million from the securitization? The filing says they used the net proceeds to pay off existing debts. A big part of this was fully repaying all outstanding balances, interest, fees, and costs related to a loan agreement with Bank of America, dated back to January 2017. This is a pretty common move. Companies often use new financing to clear out old, potentially more expensive or restrictive debt. By doing this, they effectively terminate the old loan agreement, release all associated liens, and clear their balance sheet of that specific obligation. It sounds like good housekeeping, financially speaking. And because they paid off that old loan, the company is also reporting the termination of that material definitive agreement. It's just a formal notification that the old Bank of America loan is officially history. Then Therese item 2.03, which means they've created a new direct financial obligation, or an off-balance sheet arrangement. This filing is essentially referring back to the information already discussed in item 1.01 about the new asset-backed securitization and the issuance of these notes. So it's simply acknowledging that this new debt structure is now in place. On the 30th of October 2025, the company issued a press release about this whole deal, and a copy is attached. This is part of their commitment to making sure all investors have the same information at the same time. It's a requirement for publicly traded companies. The filing makes it clear that this information in item 7.01 is not officially part of their filed documents for legal purposes, unless they specifically say so in another filing. It's more for public awareness. And finally, we get to the exhibits where all the really detailed documents are. Exhibit 10.1 is the base indenture, which is essentially the foundational legal document for these notes, laying out all the terms and conditions. Exhibit 10.2 is the Series 2025-1 indenture supplement. This document adds specific details related to this particular series of notes, like the interest rate and repayment terms we talked about. Exhibit 10.3 is the actual management agreement between the entities involved in managing the parking facilities. And as mentioned earlier, Exhibit 99.1 is the press release that went out announcing this deal. The report is signed by Stephanie Hogue, who is the President and Chief Executive Officer of Mobile Infrastructure Corporation, dated the 31st of October 2025. This is just the formal sign-off to make sure the report is official. Alright, let's look at what this all means. Mobile Infrastructure Corporation is essentially refinancing its debt by using its parking facility assets as collateral. They raised a significant amount of cash, $100 million, which they used to pay off an older loan. This move could be a sign of confidence from the company's management. They are securing long-term financing, suggesting they believe in the future performance of their parking assets and the broader infrastructure sector. The 30-plus year term of these notes indicates a long-term strategy to manage and grow these assets for an extended period. However, there are always risks. Securitization, while a good way to raise capital, can sometimes be complex. The repayment of these notes relies heavily on the operational success of the parking facilities. If there are downturns in the market or issues with managing these assets effectively, it could impact the company's ability to meet its obligations. Also, the fact that these notes were issued in a private placement means they are not as freely traded and might have less liquidity compared to publicly traded securities. In simple terms, Mobile Infrastructure Corporation is making a strategic financial maneuver to strengthen its capital structure and potentially lower its borrowing costs for the long haul. They are betting on the continued value and income generation of their parking infrastructure. The key will be how effectively they manage those assets and if the income they generate holds up over the next 3 decades. So, what is my take? It is a solid financial move that signals a commitment to long-term growth and operational stability. The company is essentially leveraging its core assets to secure favorable, long-dated financing. The risks are manageable if the parking facilities continue to perform well, which is a reasonable expectation for essential infrastructure. It's a careful balancing act, but one that appears to be executed with foresight. Alright, that is our breakdown of Mobile Infrastructure Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.